Hey, what's up guys? Have you guys ever looked at the stock graphs and you guys are wondering like, what the hell does any of this even mean? Like, you see so many lines, so many bars, so many colors, red and green. Sometimes there's gonna be a whole bunch of different lines, and what the hell do they mean? And I wish when I started out, someone could tell me their exact setups and how I could change the graphs to what suits me and what each graph means. So today in this video, I'm gonna show you guys what I trade and how I trade my graphs. So I'm gonna basically explain the main graphs for you guys, and I'm gonna try to make it as simple as possible so you guys can understand how the graphs work, why we would use them, in what situation you would use them, and how they can help you become a better trader, a better investor. Essentially, if you guys don't know how to read a graph, technical analysis, you guys really don't have hope of knowing when to buy, when to sell. And these are very key important things. So we're gonna talk about the SMA line, the EMA line, the MACD, the RSI, and the volume. And each of these are very important in determining if you should buy a stock and when you should sell a stock. So without further ado, let's get into this video. I'm gonna open up my phone and I'm gonna show you guys my graph, and you guys can see the different lines, and then I'm gonna grab my laptop and let's get started. So the first thing we're going to talk about is the SMA line. What does the SMA line stand for? It stands for Simple Moving Average. I'm starting out with the SMA because it's very easy to calculate. So if you guys look at my graph, the SMA line is basically a line that is dependent on the averages of all trading prices at the end of the trading days. So if you guys have the 180 SMA line, it'll basically have the moving average of about 180 days closing price of that stock, and there's nothing really complicated to it. So the next line is the EMA line, and the EMA line stands for Estimated Moving Averages. And the EMA line, the difference between that and the SMA is that the EMA has a more higher priority on recent price values instead of the average of a longer time period. So for example, the EMA could be for like the past 7 days, the past 10 days, the past 20 days. It's really dependent on the recent price values, and it has a different formula to calculate the line itself. So you guys can see on my graph, it's going to be a little different. You guys can see the different lines. There's going to be 3 different lines, and that's the 3 different days of the averages. So to compare the SMA and EMA, we're going to talk about which one is the better one to use and which one do I use. I use the SMA, and I know most traders, day traders and swing traders use the SMA line because it's more, I would say, accurate in terms of trying to predict if you should get into a stock or you should get out of a stock. You can also see a resistance and a support using the SMA line rather than the EMA line. I know a lot of traders on YouTube and a lot of traders in general prefer SMA because it's just really not that complicated. You guys can really even do the math by yourself. If you want to calculate the 5-day SMA, you guys can just get the closing cost of 5 days and divide it by 5, and boom, you guys have it. And when I started out, I wish someone could have told me like which one I should use, because in the beginning I only just looked at the EMA, not even knowing what the EMA meant. Like, I didn't even know it was like a moving average. I just thought it was a line, to be honest. And it's kind of funny looking back, but I'm definitely gonna help you guys. If you guys have any questions about these, you guys can always comment below. If you guys look at the graph that I have, that is gonna be the SMA line, and I use the 180-day SMA because to me, that's really been consistent for options trading and even investing. You can really tell when a stock is going to have support and resistance. I prefer the SMA because it's going to be more dependent on a long-term average instead of just the EMA, which is more dependent on recent factors. That's just my personal opinion, guys. You guys can have your own opinion, and you guys can trade exactly how you guys want. Again, this is what I do, guys. If you guys want to have my setup and you guys want to trade exactly how I trade, this is it. But by no means am I a professional, so you guys can definitely do your own research even after this. This is what has made me successful recently in trading Tesla and trading options. It's definitely something to consider when you're talking about what graph you should depend on when you're starting out. Enough with the main graph. Let's get into the what I just call subgraphs, or like smaller graphs, but they're just as important. So the first one we're going to talk about is the RSI, standing for Relative Strength Index. So according to Investopedia, The RSI is the Relative Strength Index, is a momentum indicator used in technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is generally displayed as an oscillator between 0 and 100, and most of the time it's going to be oversold at 30 and overbought at 70. And you guys can see here, what this is going to help you with is deciding if a stock is being sold drastically or bought drastically. And why is that important when you're trying to get in or get out of stock? So, for example, if a stock is being oversold, meaning it's at 30 or below on the RSI, that means so many people are selling, this stock is going down, like it's going down drastically. And this, to a lot of traders, and me myself personally, this is the chance to buy in. If you're going long, meaning you want it to go higher in the long term to profit, this is a time to buy low and sell high. When it's at 30 RSI or below it, you guys can definitely get in at this. Generally, a price of a stock is definitely going to correct itself and hopefully go up back to 70 plus. It's also the opposite. If you're at 70, it might be a good time to sell your stock and take profit, or even go short it and hope the stock goes down. So these are things that would be really helpful to know. Me personally, I use the RSI every single time I trade. I've made like hundreds of dollars in seconds or minutes just because of the RSI. It kind of gives you a time period of when you should get in and get out. And there's so many more factors, but this is just one of them that helps me. So I hope you guys can maybe use that if you guys want to. So the next graph or mini graph we're gonna talk about is the MACD. What is the MACD? It is the average convergence divergence. The average convergence divergence, according to Investopedia. And according to Investopedia, the MACD is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. Well, to me, I use the MACD as an indicator if a stock is being sold or being bought, because on the graph here, you guys can see that it's either red or green, or it's going in a direction. Generally, this, to me, I take it as if the MACD is going up into the green, generally this stock is going up, and vice versa. If the line is going down with red bars, this is going down. I'm sure there's much more to that than what I just explained, but generally I use the MACD as an indicator of direction and kind of how much hype there is in stock. Generally, if you see that there's a lot of hype in stock, the MACD will show a lot of green, a lot of buys, I would say. That leads us into the last and final graphs, which is a good transition because we were just talking about buying and selling and the flow of it. So when you look at the volume of a stock is really underrated, in my opinion, because the volume really shows if a stock is being bought, if it's being traded, if it's being passed around, how many stocks are being bought. If you guys ever have a chance to just look at a graph in a day, the stock will be more volatile if there is a higher volume, meaning there's more people buying and more people selling. So if you guys have a stock that has no volume or very low volume, it's definitely not going to move. It's almost going to trade sideways. This is important because if you guys want to profit off a volatile move, like if you guys want the stock to jump up, you guys definitely need to pay attention to the volume and if people are buying this stock. Because if people aren't buying this stock and people are doing the opposite, selling this stock, it's going to either go down or go sideways. So it's a really important thing to pay attention to. So with that wraps up the main graphs that I have for you guys today that I personally use. Again, guys, if you guys want to use the graphs that I've been using that's made me successful, you guys can surely go ahead, but this is not me telling you guys that this is the best way to do it, or even if it's like for you, like you might trade differently, you might have a different trading style. Trading to me is personally an art. So generally these are the graphs that I've seen other traders use, and I basically almost just learned from them. So if you guys want to look into it, feel free. I hope you guys are successful investors and traders. And with that wraps up the video, guys. Thank you guys for watching. If you guys want 2 free stocks with Webull to start your investing and trading, you guys can definitely click the link below. You guys can get 2 free stocks. Want to start investing, want to start trading, and if you guys are wondering what the platform I've been showing you guys is, it is Webull. So you guys can definitely go check it out if you guys want. I also get free stocks out of it, so you guys would definitely be helping this channel. So thank you guys again. If you guys want more videos like these, if you guys want more stock term videos, I'll definitely make more for you guys. Just let me know and smash the like button so I'll know. And I'll catch you guys next time.